with Rohit Srivastava, founder and of Strike Money analyst and India Charts as well. Hi Rohit, good to be speaking with you. Good afternoon. Rohit, through your social media handles, what we get to know is that you have been quite bullish on the markets, and you're also highlighting that maybe it's the time to go ahead and buy with the kind of recovery we have once again scaled to that 23,000 mark. What's your take?
Yeah, it definitely looks like that. We spent several days basing out, and waiting for this recovery to kickstart. 22,800 we did touch. Then, just 2 days ago, we went slightly lower to 22,725. Hopefully, that's the final line in the sand that we'll have to watch. And I think today's market should be telling if the end of the day we are able to hold up onto these levels and close higher, maybe close above 23,020 odd. I think that would be a good sign that the worst is probably over and we start a meaningful recovery from here. So that is the overall setup. A lot of tools that we look at have been reaching the extremes, whether it's the number of stocks that have fallen below the 200 DMA in the Nifty 500 basket that almost went down to almost 13 to 12%, compared to around 15% when the Nifty was at 15,200 in 2022. So that's the kind of extremity that we are really talking about. And so a similar size correction or sentimental correction has already happened, which is why I anticipate that the markets will pick up. Though we can get into how much it will fragment between large cap, mid cap, but generally everything's fallen so hard that there is value to be bought into, and I think you will see us bounce back in terms of levels to probably initially we'll go back to say a 50% retracement of this entire fall, which should get us closer to around 24,500. That should be the initial level we will start out looking for. And then as it develops from there, possibly set higher levels as well. I mean, 61% would be around 24,920. That would become the next level. So those are the upside levels that we'll be wanting to go to. Now can't really put a time on it. It could be a month, it could be 2 months, maybe end of March, early April, that we should probably be at those levels.
Right. Hi, good afternoon, Rohit. Thank you so much for joining us. This is Ankita joining in now. Rohit, let's talk about Nifty Bank. Now, Nifty Bank is trading above previous sessions high. Is this, could we really expect a reversal now on the upside as far as Nifty Bank is concerned?
So Bank Nifty has actually outperformed the Nifty on a relative basis. If we just see that it bottomed in late February, and then after that, it's actually not, in fact, late January. And since then, it has actually not gone back to those levels. The Nifty did fall that much, but Bank Nifty did not. And in that sense, it is the stronger of the two. It's already bottomed, I can say, and it should be starting the next move higher, which means that it should get past the Feb high, which we made at around 50,600, and then head towards around 52,000 after that.
All right, but Rohit, any sector where you would like to help with your view, which can actually participate in a good fashion in the kind of recovery that we are witnessing? Because for today, we have seen some of these defense packs, some of these high beta names from the defense and the railway sector specifically contributing in the rally. But other than that, any other sector that you believe will do well in the recent times?
So I think broadly, PSU stocks have been beaten down a lot, and I think they are gotten to the point where they are very oversold. If I look at the weekly RSI, it had gone to as high as 92, and it has come down to as low as 30 now. So that's a significantly meaningful correction that we have seen in public sector stocks. And by that, we can include both the public sector banks and the PSE index, which sort of has most of the sector stocks, from whether it's oil and gas, metals, and capital goods. So it's a pretty broad base. But in general, I would say PSU stocks have seen most of the beating and they should start a meaningful recovery. So that would be the most oversold sector to really look at, which is PSUs and PSU banks. On the other hand, I think strength should return to the metal segment. Now, we have seen metal prices, especially copper prices, start to pick up recently. We have seen precious metals pick up. Now, that sort of signals a resumption of the commodity cycle, which had seen a good correction because the Bloomberg Commodity Index almost saw a 61% retracement last year. and has been slowly edging up from there. So I think commodity stocks also, which is then we look at the Nifty Metal Index, they should start doing well. We are seeing an uptick today. In fact, over the last 10 days, some stocks like Hindalco have not really fallen to new lows along with the market, neither has Disco. So you actually are seeing relative strength in the metal segment as well on a 10-day basis. And I think that strength on the Nifty Metal Index should slightly continue into the future. So that's another sector I would look at.
All right, so PSUs should start moving up after seeing the considerable correction. Metals is also something that you are positive on, Rohit. But on that note, thank you so much for taking the time out and joining us today.